podcast when life gives you lemons. I'm Kevin.
And I'm Palmy. We consider ourselves disability advocates and intend to spotlight some disability issues and things we find interesting that we frequently encounter when we're out and about. Also, some history on disability that we find interesting.
Against you if you hope that you won't lose your benefits either way. If you start making, decent amount of money via the stock market or any financial way, Social Security gives you a 6-month grace period to make sure it's going to work out before it affects your benefits. Any other agency that you get benefits from, you have to check with, because I don't know each and every one of them.
Yeah.
Good enough. Okay, Paul. Okay, let's go back to Webull. That's an app. Is that free as well?
It is free, yes.
So basically, you're using a free app to make free trades.
Yes.
Paper trades.
It's completely free. It doesn't cost anything. It's an app in your phone. You can get it on you can go to the website on your computer, and you just go in and the paper trade. I don't believe you have to put a bank account or anything in there. You do have to put your information in there, but I don't think you have to put a bank account to it, just a paper trade on there. It's set up where at the top of the page, it'll say that it'll give you the top gainers of the day. So you can go in and click on that, and it'll scroll down all the stocks that day that are making the most money in the market. And you can click on one of those and paper trade that stock and see how you do with it, It will do the top market, it also will give you the top losers of the day on there too. But it'll say, like, if you get in there early, the stock market, our time opens at 8:30. But you can trade in the pre-market before the market opens. And on Robinhood, that is 6 a.m. On Webull, I believe it's 4 a.m. that you can start trading. You can go in there and click on that banner at the top, and it'll say pre-market top gainers. And you can go in there, and there's a lot of penny. Now, it won't all be penny stocks, but there are a lot of penny stocks in there too. You just scroll through, and you'll see stocks for 7 cents, 5 cents. You'll see stocks for $300, but you just scroll through and you can find any price point that you would be comfortable with trying to trade, and just paper trade that stock and see how well you do. And do that for a few months and get used to it and see how well you do before you start using real money.
Okay, you mentioned that Robinhood was free. Did they charge for your trades or anything like that?
Yes, they all charge for your trades, but it's not much. I mean, it's you won't even notice it. I mean, now crypto.com, if you wanted to get in strictly into crypto, there's a lot of cryptos on crypto.com. But crypto.com charges quite a bit per trade. And
okay, when you say quite a bit, can you
I sold
take a ballpark?
I sold $1,000 worth of Shibu stock on there 2 years ago, and it cost me $120 to sell it.
Wow.
But Robinhood's nothing like that. Robinhood, actually, I think how Robinhood works is they don't charge you until you pull your money out. I think you can make all the trades you want free, but I think when you pull your money out, they'll take a small fee off of it, but it's nothing like that. I mean, it's maybe, a few dollars compared. But I haven't taken any money off there in a long time, so I don't know. I trying to build my account up, so I've left my money in there for now. But yeah, I would really recommend people paper trade before they try going in the market. And you might find there's a lot of apps out there. You know, Robinhood's not for you. Charles Schwab has a very friendly app, and they have what they call Think or Swim app that goes along with Charles Schwab, and you can paper trade on that one also. And it will give you the daily news on there. You know, that's another thing about trading is if a stock has news come out that day and it's good news, chances are that stock is going to do well. So you can go to Yahoo Finance, you can go to CNBC app, and you can see all this news. You know, you can read the news, and there's apps that you can, you know, there again, that costs money, but there's apps you can download. You'll get the news before anybody else. But on Webull, if you click on a stock, let's say the number one gainer of the day is 11-cent stock, and you think, okay, this might be what I want to get into. Well, click on that stock, and at the top, it'll have another banner, and it'll say news. And then I have a feed where people are talking about that stock. But click on that news, and if that stock has news out that day, then there's a good chance that stock's going to do good. Which, of course, the news has to be good news. If the stock is coming out with an offering, you don't want anything to do with that, because that means that stock's going to drop. So an offering means they're going to add shares to their portfolio. So if you have 100 shares of that stock, and then they go and they, however many shares that company has of that stock, let's say they double their shares, they make an offering, they double your shares. Well, your stock just became worth half of what it was worth. So if you had 100 shares and it was worth $100, well, you still have 100 shares, but now since they made an offering and they doubled the amount of shares that came out in the company, now your stock's only worth $50. You know, does that make sense? Mm-hmm. You know, so you want to stay away from any news where a company is saying they're coming out with an offering. Unfortunately, some companies don't warn you about that. I took a big hit a few weeks ago on that. I was in a day trade, and I was up over $200 on this stock, and within a matter of seconds, I was down $175, and wasn't nothing I could do about it. It just, I had to get out of it because they came out with an offering, and the price of their stock went down. It doesn't happen very often. I mean, I've been doing this, day trading, I've been doing that for 2 years. Crypto and everything, I've been doing it since before the pandemic. And that's the only time it's ever happened to me. So I don't want people to think, oh, that's something that happens all the time. It does happen all the time, but chances of it happening to you all the time is pretty rare. I mean, there's, how many stocks is there on the stock market? I mean, it's a crazy amount. And for you,
Huge.
For you to have that happen to you more than once, then it's pretty rare, you know.
It's like somewhere along the lines of like being struck by lightning twice.
Kinda. But you also got to know what to look for. Like I said, you know, I only try to trade stocks that has news behind it. That way I know why it's going up, why it's not. You know, China likes to come out with these new IPOs, which is a new stock. They'll form some company with 2 people in it, and they'll throw a new IPO on the market, and they'll put a bunch of money into this stock to get people to come to it. And I've seen these things go from $4 all the way up to $3,000 or $4,000. I mean, not lately. That was back in pandemic days, but it's nothing for them to go up to $100, $150. And it's easy to get wrapped up into that stuff, because I was for a while trying to chase that, that big win. But the problem with them things are, most of the time, 99% of the time, they're going to spike real high and then they're going to give it all back within minutes. And for one of them to break out and go like that is very rare. I mean, very rare. And those are another one you have to be careful with, because you want to chase one of them. You're watching it and you see it started out that morning at $3 and it's at $30 now. Oh man, I got to get in this. Well, that's strong time to get in one. When it's already up 200-300%, that's not the time you want to get into a stock. You want to get in a stock as low as possible. You want to be the first guy to get in that stock. You want to in that stock when it's at $6, not when it's at $30. And those stocks will always pull back at some point too. And, buying a dip buy on a stock, that's where a spike like that, then it starts giving back and it gets back down to the support line, which is where is usually a previous high on that stock. That's usually where the support line will be. That's where, if you're going to get into a stock that's already spiked, that's what you're looking for, is that first dip buy. When it comes back down to the support line, then you want to get in it for that next wave up. Like I said, that's all part of day trading. If you're looking to do a long-term investment, it's really hard to do with penny stocks. I mean, because just most of them just do not hold their gains.
I've always heard that one of the safest investments are bonds.
They are.
Correct?
They are. And what do you think all the, Wall Street's made up of the most of the wealth on Wall Street is like the top 18% of the people trading it. And when the market crashed Friday, where do you think all those wealthy people put their money?
In bonds.
They put them in bonds. And they took it out of the market and they put it in bonds to wait till this market corrects itself, which the market's in a correction mode right now. There's nothing really for anybody to panic with. If your 401ks are looking bad right now, there's really no reason to panic just yet, because the market is in a correction mode. The market has been going nuts. The S&P 500, it was so overextended. It was up over $600, and it was so overextended that it had to come back down. So as long as we stay above I'd say 450, 460 on the S&P 500, we're going to be fine. We're going to bounce back and everything's going to be fine. If that goes below that, then we look like we could slip into a recession. But if we do slip into a recession, I think it's going to be short-lived. I don't think it's going to be long. So getting back to those bonds, what's the government do with bonds? The government takes the interest that they get off of these bonds and they pay bills with it. If these rich people are putting their money into bonds right now, then that means our government is going to be able to pull the interest rates off of these bonds and possibly pay down some of our debt, maybe help fund some programs that need help funding, maybe Social Security, whatever it may be. And that's not a bad thing. That all kind of works hand in hand with one another. So I think the next 2 or 3 months is going to be very telling of what happens, in our market. But right now, I don't think there's any reason to panic whatsoever. I think that we're just in a correction mode. And if people have a little bit of extra money, to invest in the market, now's the time to do it, because it's at historic lows, and that's when you want to get into the market, is when something's low. If you do have a little bit of extra money and you don't know how to invest it, I suggest talking to, a broker, a stock broker, a retirement broker, and see what they have to say. But if you're just, $20 or $30 here, I would really look into like a Roth IRA or something, because that's your safest bet. I mean, but if you just want to play in the market, then I would learn all I could about it before I put real money into it.
Yeah, for sure. There's a lot of knowledge to be had out there with the internet. It's just like scientific data or the studies you do. There can always be bias when you listen to somebody else's opinion.
Yeah.
You have to just figure out what that bias is,
Do your research. I mean, that's the biggest thing I can tell people, is to do your research and come to your own conclusions of what is best for you. I don't want anybody taking financial advice from me. I'm just here trying to, give you some options of what to look at and how to go about it. But I would never recommend any stock to anybody. I would never recommend you put money into stock. I wouldn't recommend you put money into crypto. I'm just saying, I'm giving you the options of what I would do, or what I do. And
yeah, I don't think stock trading, whether it be penny stocks or crypto, is like for everybody.
No.
I don't have the sort of personality to, make that work. I'm too cheap.
You got to have nerves. And it's
I'm too
tough.
cheap. I chicken out before I would make money, and then freak out when I didn't. So
it's definitely, it plays on your emotions. That day I lost $175. My heart was broken.
I'll bet.
But the next day I made it back, and I was on cloud nine. I mean, it was just a rush like you wouldn't believe. But unfortunately, there's been more of those lost days, and it seems like my losses are a lot bigger than my wins sometimes. But I'm getting there. I mean, it's all a work in progress. I mean, there's another thing we didn't talk about this before. We got time to go over something else here?
Sure.
If you do get into stock trading and you find that you have a niche for this and you think that you can make money at this, and say you do make money, but you just don't really have the money to invest in it to really fund your account the way you want. There are companies out there, they're prop firms, and what they do is you can buy an account from them. You spend your real money and you buy an account from them, and you have to pass a test depending on how big of a account you want. They go from $10,000 all the way up to $200,000. So you can get into one of these $10,000 accounts for under $100. So what you'll have to do is you'll have to make $10,000 in the market before you lose $10,000. If you lose $10,000, then you've lost your money, you've lost everything. You had to refund the account. And if you had to refund the account, the next time it costs more. So, but the good side is if you get funded, then they give you real money. because you're paper trading on the test. And this isn't penny stocks. This is S&P 500 stocks. These are blue chip stocks you'll be trading. So you go in and you get funded. Well, then the first 3 withdrawals you can make off of there will be $1,000 a piece. If you make that much, you have to be able to make that money, but you'll get funded 100% of that $1,000. Then after that, you can pull off however much you want. If you make $20,000, you can pull off that $20,000, but they get 10% of that. You'll get 90 and they'll get 10. And the way it's set up is you can only pull money off of it every 14 days. And you have to make at least 6 trades of $50 or more, one way or the other, loss or gain, in those 14 days. So now these firms are set up to make money. So the guy that I follow has been in the stock market for years. He's 31 years old. He's a self-made millionaire. And the first 2 prop firm attempts that he made, he failed both of them. So I don't want people to think, this is easy money, because it's not. I'm doing one right now, and I've not failed out of it yet, but I'm getting close. I mean, and it's I bet on the S&P 500 yesterday or Friday to bounce back up, and I didn't make it. So if I was shorted the S&P 500 yesterday instead of betting on it to go up, then I'd been sitting all right. But that is an option. But I only suggest you even look into this after you're familiar with the market and you've been doing it for a long time, and you feel comfortable that you can make money in the market.
Right.
But that is an option.
What I want to do is go back over and summarize our discussion so far. The freest, cheapest, and best option to start with is going with paper trades. Get a feel for what you're doing.
Yes, absolutely.
The app is free.
Yes.
And the trades you're making, you're using fake money for. So, it's like playing a video game, if you will. It's just
right.
Entertainment, education, whatever.
It's kind of like playing Monopoly.
Right. Then perhaps if you decide this is something you want to do, you want to look at Robinhood.
Yes.
And then you can start trading. Is there anything you can't trade on Robinhood?
Well, there is some penny stocks that Robinhood won't have on there. I mean, but for the most part, Robinhood has everything. Now, crypto, they're limited to what they have on crypto. They do have the basics of crypto, but they don't have a lot of crypto on there. But no, you can trade just about anything on there. I mean, and the thing about Robinhood that's good, why I say it's good for beginners, most of these apps, they have a buy and an ask when you're trading, and you have to put in a price to what you want to buy the stock at. Let's say the ask is $3 and the buy is $2.89 or whatever. Well, you have to decide somewhere between those two where you want to buy. On Robinhood, you don't have to do that. On Robinhood, you click on the banner, on the ticker, you pull up the stock, you hit buy, you punch in how many shares you want, and then you just swipe up and it buys it for you. You don't have to worry about putting in any price, but now it buys at the price. You can watch whenever you set everything up. You can sit there and watch the stock, and you can watch it move, the price on it. So you can say, okay, the stock's at $1.49, but it went down to $1.46. Well, you can keep watching it. Maybe it goes down to $1.40 or whatever. Then you can swipe up and get a cheaper price on it. On the other hand, you can go on there and it could be running away the other way. So, but the good thing is you don't have to put a price in. You just swipe it up and you buy it. Now, you can do limit orders and all that, but I think that would be for another lesson. I mean, there is ways that you can set a price on Robinhood, but it's a little more technical, and I don't think today would be a real good way to get into it, but for the most part, any beginner can buy on Robinhood. All you gotta do is just swipe up after you put your price in and how many stocks you want. You're good to go. And you sell it the same way. You go in, you can sell partial. Say you buy 100 shares and you only want to sell 50. You can go in, punch in 50 shares, swipe up, and you've sold them. Or there's a button there to say sell all shares. You just click on that and it pulls all your shares up. And then when you get ready to sell, you just swipe up and it sells all your shares. And so you buy in at $1.40 and 30 seconds later it's $1.60. You swipe up and you get out and you made 20 cents a share. That's on a good day. That's what I like doing, but yeah, it's nothing like making a few $100s in a 30-second time span. Then again, in 15 seconds, I lost $100, almost $200. So, it's the nature of the beast. I mean,
well, Paul, thanks for your expertise, and I wish all of our listeners the best of luck if you're going to go out there, but bear in mind how easy Paul said it was to make money than to lose money.
Right.
Just if you got the sort of personality where you can deal with that sort of situation, great. If you don't, like me, I'm just too chicken to take the plunge into there. So thank you.
I totally understand.
For explaining some of this story.
Well, I hope I was clear as mud to everybody. I just like to wish everybody luck that tries this, and just be safe with your money and be smart, and I sure don't want to see anybody lose their money, but it'd be nice to see a few of you make a little bit of money. So
what we do is you have the email address on our website, which is www.whenlifegivesyoulemons.net. If you have questions or situations you'd like to discuss with Paul, I'll pass those over to him. And that way you can get a little bit more than my guesstimation. You can get somebody who's got some educated guesses for you and perhaps answer some of your questions. Does that work for you?
I'll be happy to help if I can,
Okay. Till next episode, take those lemons and make your own lemonade.